Good morning, folks. Trust we are doing good. You're welcome to another webinar series that we've got for y'all. Today we're talking about candlestick formation, and it's going to be amazing because candlesticks are like, how would I put it? Candlesticks are one of the tools that we use to determine price projections in the financial markets. And once you can understand or grasp the concept behind candlestick, you'll be able to be profitable. You'll be able to spot things easily on the chart. You'll be able to relate with price. You'll be able to understand how price really moves, how price really is, what price should be doing at that moment. You'll be able to understand all of these things. All of these things you will be able to understand. Okay, so good morning. I'm your host, Akinwale Chiwike, and welcome to today's webinar. So what we do at Eagle Global Markets is, I say it's the best thing anybody could do for you in this century. We offer you access to the financial markets. We give you access to become profitable. We give you access to make money. We give you access to grow your wealth. We give you access to be able to earn a stream of income. Yes, that's what we do by providing you platforms to trade the global financial markets. Okay, we provide you platforms to trade the global financial market, and that's one of the best things. That's why I really like when I come on this webinars to discuss with you guys about the financial markets. Okay, good morning, Phil. Trust we're doing good. So if you can hear me properly, okay, if you can hear me properly, let's quickly do the thing. If you can hear me properly, please drop a yes in the chat box. The chat box section is to converse with me or anybody in the chat group. Questions is to ask question. Polls is to respond to my polls. And well, I don't know if you can see the people section. It's just to check if your body is on the webinar. Okay, so we have 3 products at Eagle Global Markets for you. Okay, the 3 products are the MT4, where you can trade the global markets in Naira. We have the cloud, in dollar. We have the cloud trade where you can trade the global markets in dollars. And we have the copy trading platform where you get access to copy consistently profitable traders. Okay, you get access to copy consistently profitable traders, copy their trades in an automated process. Okay, you get access to copy this guy's trade, and it's all automated. So, can anyone remind me what we discussed in our last webinar? Can anyone remind me what we discussed in our last webinar? Can anyone remind me what we discussed in our last webinar? Morning, Adelia. Morning, Debbie. Morning, Kelechi. It's been quite a while, so Shooks on my webinars. I believe he's quite busy. Okay. Yep. Good morning, Adjus. Trust you're doing good. So in the last webinar, we talked about Forex trading for beginners. I was able to give a very amazing breakdown about the financial markets to everybody who was on the call, and also give an introduction on how the financial market works and how they can profitably trade and earn from the financial markets. Okay, that was what we basically did on Tuesday's webinar. And I so much want to dive right into today's topic. Like, first off, what do you think candlesticks are to you? Okay, what do you think candlesticks are to you? What do you think candlesticks are to you? Anybody at all? What do you think candlesticks are? Anyone at all? What do you think candlesticks are? What do you think candlesticks are? Yeah, okay, a sign. I love that word. I love that word, a sign. I love the word a sign. A sign. A sign in the financial markets. Quite brilliant. Quite brilliant. Anybody else? Anybody else on what they think candlesticks are? Candlesticks are just particular graphical and technical representation of price movements on different financial instruments. I believe that's what, okay, different time frame or different financial instruments. Brilliant. Price pattern. I love that, Philip. Price pattern. Okay. It tells you the language of the market. I'm loving all of this. And you know, the most interesting thing is everybody's correct. Everybody's correct with what they're saying. And I love the way everybody's putting it. Okay. So I know you guys will be wondering why the Japanese guy. Well, it's because of the origin of the candlestick. Okay. It's because of the origin of it. That's why I add the Japanese guy on the slide. And that's a candlestick chart. So basically, what you'll be learning in this session is the origin of candlesticks, its formation, candlestick on its chart, its implementation and advantage, then conclusion. So I love every response everybody gave, and the truth is, everybody gave what they believe candlesticks are, and everybody's correct. Because candlestick can be a sign, it can be a price pattern, it can be whatever you say it is, and that is what it is. It's the language of the market. I so much love that address. Now, the origin of candlesticks. I don't want to bore anybody with the story of candlestick, how it evolved and all. No. What I want to do is I want to go straight to the point. Candlesticks originated from Japan. Okay? That's where candlestick originated from. And basically what it was, or its usage, was to count or get calculations for the prices of rice whenever they believe there's going to be a surge in demand or supply. That's how candlestick originated. That's where candlestick originated from before everyone started using candlestick. I think it was in the 19s. That's when everyone started using candlestick because of it gave a certain reaction of price. Okay, just because of it gave a certain reaction of price, it tells a certain story. It gives you that bias on price. It tells you, how would I put it? It gives you a heads up on what price is literally about to do. Okay, so that's where candlesticks originated from. Do we all get the origination of candlesticks now? Do we all get where candlesticks originated from now? Yes or no? If you don't, just say no. I will go over it again and again and again and again. I'm going through the chat box. Haven't spoken that long, Eric. I haven't spoken that long. Okay. So what I literally explained was the origin of candlesticks. Okay. it was in the 18th century. Okay, 18th century. Now I have to start telling the story. Okay, they were developed in the 18th century by a Japanese rice trader when he was trying to use it to determine when a surge in supply and demand will kick into the market so he can sell his rice at higher prices. Okay, that was where candlesticks originated from, and it was introduced to us, the Western world, by Steve Nissen, okay, in his book Japanese Candlestick Charting Techniques. Okay, that was where it was introduced to us, and that's just the origin of candlesticks. Origin of candlesticks was from Japan. Then Steve Nissen brought it to us, the Western world, the Western traders. Okay, brought it to us. Okay, he saw how this was working. He saw how it reacted to price. He saw what was needed for traders to make profits trading Japanese candlesticks. He brought it to the Western world. That was all he literally did. All he literally did. Now, how does candlestick form? I'll be sharing my screen right now. And I dropped a chart on the Telegram group. A lot of people saw it and they did not react to it. Whoever saw it and did not react to it and did not join the webinar will miss out, because I'll be explaining what was on that chart in the webinar. So let me just hide all of this. So I'll be using a diagram to explain Japanese candlestick. Okay, so let's take this right here. Let's take this as a bullish candlestick. Okay, bullish candlestick. So when I say the word bullish, all I mean is up. Okay, all I mean is up, up, up. Okay, let me make it what everybody understands it by. Let me change the color to green. Okay, so this is a bullish candlestick. An up candlestick. Now, how does a candlestick form? A candlestick forms very easily. Okay, it's not difficult. A candlestick has components. So let's just take this candle as a bullish candlestick. Okay, this is a bullish candlestick. This is a bullish candlestick right here. So I can delete this. Now, when we say how does a candlestick form, a candlestick has components. Okay, it has components, and these are the components. I'll type them out right here. I'll type them out right here on my side, right here. We have the open, we have the close, we have the high, we have the low, we have the body. Okay, this is what a candlestick consists of: open, close, high, low, body, which is the trading range. Now, let me point it out to you from this bullish candle. Okay, from this bullish candle, I want to put out I want to put out call out tools on all of this. So this is a bullish candle. Remember, this is a bullish candle. Okay. Now, in a bullish candle, we have the open, which is lower. The open is low. Okay. It's at the bottom. This is the low. Okay. So this is the opening price. This is the low. This is the high. This is the body. This is the body. And this is the close. Okay, so this is a bullish candle. Okay, this is a bullish candlestick. And I said, this is the low, this is the open, this is the body, this is the close, and this is the high. Now, in a bullish candlestick, it means price was going up. Okay, and when price wants to go up, the open cannot be above, it has to be below, then it moves higher. This is why we call this a bullish candlestick. Now let's go to a bearish candlestick. Let me draw out a bearish candlestick. Okay, so I'm trying to draw out a bearish candlestick for you guys. It's most times color red or color black. Okay, color red or color black. That's the color it actually has most time. Okay, so we have the bullish candlestick here, and we say this is the high. This is the high also for a bearish candlestick. Low is the close for a bearish candlestick. Below is the low for a bearish candlestick. Above is the open for a bearish candlestick. And the body remains the same. So you can see this is just how a candlestick forms. This is the formation for a candlestick. This is how a candlestick is in any textbook you read. In any book you read, in any PDF, in any chart you see, this is how a candlestick is. It has 5 characteristics: the open, the close, the high, the low, and the body. Okay? And for a bullish candlestick, the closed body and open is different from the closed body and open of a bearish candlestick. The body are the same, but the open and close is different. Why is the open below? Remember, price wants to trade up. Okay? Price wants to trade up. No matter, even if it opens up, even if it comes and open here, the open is still below because it's trading up. Okay, if we have a bearish candle, even if it trades lower and the new candle wants to form and it opens here, which is low, the open is still above. Do we all understand? Yes or no? Do we all understand how candlesticks form now? Yes or no? Please ask questions also if you've got questions. Do you understand how a candlestick forms now? Okay, I'll go over it again. You've got nothing to worry about. You've got nothing to worry about. Any other person? I'd like to get a lot of response. I'd like to get a lot of response. I'd like to get a lot of response. And also, let's please check the poll section. Let's please check the poll section to respond to the polls, okay? Let's please check the poll section to respond to the polls I sent out right now. Yes, the significant components are the 5 components I made mention of, Eric. Open, close, high, low, and body. Okay? Open, low, high, close, and body. Okay? I'll take it from the top again. Okay, I'll take it from the top again. I said a candlestick has 5 components. 5 good components, which is the open, close, high, low, and body. Okay? And I said for a bullish candle, this is bullish. Let me type it above so you know. Okay. Yes, this is bullish. And I said bullish is when it is going up. Okay? This is bullish. And I said this is bearish. Bearish is when it's going down. Now, for a bullish candlestick, it has the same 5 components. Okay? It has the same 5 components. The same 5 components, which are the open, close, high, low, and body. Now, we said the low is below, the high is above, the close is above, the open is below, the body remains the same. Body is where the candlestick moves, where price, an area where price has covered. That's where we say the body is. Now, for a bearish candle, we have the high and the low, which is the same as the high and the low for the bullish candle, and the body remains the same. But what is different is the close and the open. So this is how candlesticks are. This is how candlesticks are, and I'll show you a chart in a few minutes to show you what to identify when you're looking for a candlestick. Oh, okay. So the body is where if price moves, you make profit. The open is just where price opened at. The low is just the lowest point price went to. The high is the highest point price went to. The close is where price closed at. That's their function. Okay? That's their function. So do we understand now? Yes or no? I like to get a lot of response. I like to get a lot of response. Do we understand now? Okay, brilliant. Brilliant, brilliant. Now that everybody is on the same page, we can move ahead. Now let me show you candlestick on a real chart. For those of you that don't have a trading account with us at EV Global Markets, please click the link down below, access.evglobalmarkets.com. Okay, access.evglobalmarkets.com. Now let me show you a candlestick on a real chart. This is a candlestick on a real chart. A minute, let me just save my template. Okay, so let me just add the basic one that we all know. Now you can see green and red. I said green goes up. It means price is going up. Red means price coming down. Basically, that's what it means. Basically, that's what it means. Price is going up, green. Price is coming down, red. And you can see, if I zoom in properly, see high, low, open price, closing price. You can see the same thing also on all these bullish candles, the green ones. We have the low, we have the high, we have the opening price, we have the closing price. See how easy it is on the chart. Okay, let's please save all the questions. Let's not divert from what we're discussing. Let's save all the questions to the end of the class and drop the questions in the question section so I don't start looking for it in the chat box. Okay, so let's go back to the slide. Now that we've seen the formation of a candlestick, now basically the formation of a candlestick is just us. Okay, us. Now I said the word us because of when candlesticks form, it is due to human reaction. Okay, it is due to human reaction. It is due to human reaction. That's just how it forms. When we react to price, candlesticks start forming based on the certain time frame we are on. Okay, so candlesticks on a chart. I already showed you candlesticks on a chart, how a candlestick is on the chart. Now, the candlestick chart derives its name and all its components from a candlestick, because now this is a chart that the only thing you can see there are candlesticks, like I showed you, and they tell a lot of story. Okay, they tell a lot of story about price, and I'll prove it to you when we talk about the advantages, which I just mentioned. It just has one advantage, which is it gives you foresight on what price will be doing. So this is a candlestick chart. And the amazing thing about candlesticks is you can change the color of your chart to anything you want. Like I was using black and green before, like we saw, and now it's red and green. So it's just based on your preference, what you like about the charts. You can use your candlestick colors to anything you want. And this is what a candlestick chart looks like. Okay, this is what it looks like. Candlestick chart tells you more story than any other type of chart. Now, I'm not disputing the fact that other charts are amazing to use. Yes, they tell their own story in their own way. But if you are basically trading price action, what price is literally doing, the candlestick chart is your best bet, because the major advantages that it has is the story. Now, where does the story come from? The story comes from its five components. The open, the high, the close, the low, and the body. I'll prove it to you when we start analyzing DXY and AUD/USD. Those are the two pairs I have in mind to analyze. And I'll show you how amazing it is, how it tells that story, and how you can use it to your advantage also. Now, all in all, the major idea behind the candlestick chart is to get you to view price from a certain perspective, from a certain angle in time. That's why we have candlestick in time frames. We have the 4-hour time frame, which one candlestick will tell you what price has done for the last 4 hours. Which one candlestick will have the 2-hour time frame, the 1 hour, the 30 minutes. It just tells you what price has done or will be doing for the next 30 minutes, for the next 1 hour, for the next 2 hours, for the next day, for the next week, for the next month. And you can make trading decisions of that. So that's basically what candlesticks are about. Now we've come to the end of this session of talking about candlesticks, and I want to show you guys a lot on the charts. Okay, but before we go to the charts, I want to take questions first. What's the starting point for someone that has never traded before? The starting point for someone that has never traded before is to basically first understand the basics of the market. What is financial markets? What are financial instruments? From there, understand the terminologies, pips, lot sizes. Once you understand the terminologies, you can start going to the charts, because from the terminologies itself, you'll be able to see what is happening on the chart. Like one terminology in the financial market is bullish. Bullish means up. All you need to do on your chart is go to your chart and start looking for where price is going up. When price is going up, you want to be buying that financial instrument. Bearish means price is going down. When price is going down, it means you want to be selling that financial instrument. That's basically how you start. Okay, there's no 7 keys to starting. You just start even if you have 1 key. You even start if you can't find any key at all, because in the long run, you will start to find all the keys as time goes on. On the path towards trading, you find all the keys. Nobody got all the keys to start trading. You just have to start doing it. You have to get started. Go on the charts, start trading. That's how it's done. Not, I want to learn all of trading before you start trading. Scared money don't make no money, okay? You don't make money without starting. You get started to start making money from the financial market. And yes, losses are inevitable in the financial market, but the major goal or the main goal is to make enough profit than the losses, okay? Yes, you lose money. Yes, see, that's one constant thing. But once you're not scared of losing money, that's how you make money in the financial market. Price could be going up and the next minute it start going down. You're buying. You are in profit, but your greed won't allow you to close. You won't use a stop loss because you believe the markets will continue going up. That's why there are protective measures in the financial markets. So, Mr. Yakin, do you understand? Mr. Yakin, are we clear on that? Brilliant. So now let's go to the charts and talk about the DXY chart I dropped in the Telegram group. And we'll talk about AED USD also, and we call it a day. Okay. So if you're new, there's no need for you to try to act all like as if you don't understand it. It's going to be the classes for advanced traders who are already in the financial markets, and you just follow along. That's all I can say. Just follow along. So I think last month or last 2 months, last 2 months, if you're on the Telegram group, if I remember, I called the dollar would trade higher. I called the dollar buys, if we can all remember. Can anybody remember? Just if I'm lying, say I'm lying. If I'm not lying, say I'm not lying. Or just say yes. If I called dollar buy and you remember, say yes. Okay? And if you think it's a lie, just say it's a lie. Okay? So I called dollar buy 2 months ago and it played out. Okay? I called dollar buy 2 months ago and it played out. Now, I called dollar sell also. I called dollar sell from this area here. Well, I was being very aggressive, but it's playing out. Let's just put it that way. Now, I expected dollar to take out this old highs, but it didn't. That was not really my plan though. But when I saw it was creating a series of higher highs and higher lows, I felt okay, possibly to take out this old eye. But the fact that it's not taking out this old eye and came back to this origin and price, I feel it has a lot to by default. Okay, I feel it has a lot to do on the downside because of this inefficiency in price right here. Okay, so dollar traded back into this origin, and that was why I sent what do you see on this chart. It traded back into this origin, and we are moving down at the moment. Okay, we are moving down at the moment. We have an old low right here. We have a first quarter of the year low right here, Q1 low right here, and we have Q2 low right here. Okay, so basically what I think is we might trade lower to take out those lows, but first is to understand that we have a low right here, clean lows, so that might be our first area of target. Okay, I don't want to act like a market maker at this time, okay, to say it to just come down. No, it won't just come down, it will still go back up. Dollar will still go back up before coming down. I can assure you that. Okay, I can very much assure you that. Now we had the previous order here and we broke market structure. I really don't want to mark out. I'll just use doodles today. I'll just use the brush to mark out. So we had orders right here and we broke market structure from that order. Okay, we broke market structure there. Then we start creating a higher high, broke it, higher low. We protected the higher low, protected the higher low. We had higher high, we went higher, we had higher highs, we had higher lows, we had higher highs, and well, and higher high or a major high. Then this was the last higher low. Now that was the last higher low, yeah. And look at what we have today. We already broke that higher low. Do I think dollar will go down? Yes, we already broke market structure from there. Okay, we already broke market structure. Market structure is bearish to me from here. So what do I expect dollar to do? I expect dollar to go back up because after every BMS, there have to be a RTO or a mitigation. Okay, an RTO or a mitigation. So when I go back to this purple area right here for RTO, return to order block before we go down to this old low. Okay, that's just my thesis, and I believe if you understand what I'm saying, you would agree with me that that's what is likely to happen. So with this right here, I know dollar will go up before coming down, but I'm interested in dollar coming down. I can make money from dollar going up, I can make money from the dollar going down, either ways. Just with this information, I can trade any dollar pair I want. Do we all agree to that? Like, just with this information, because I know what dollar itself is going to do, I can trade any dollar financial instrument. Do we all agree to that? Brilliant. Okay, someone attested to that. Okay, now that I understand that dollar will go up, I want to look at AUD USD. Okay, I don't want to bore anybody with long stories on AUD USD. I'll just go to the 1 hour time frame. And I'll tell you what happened during FOMC yesterday. So everybody thought, yes, I was bullish on AUD USD yesterday. I got my stop loss hit. I'll be honest, I took a stop loss. Everybody takes a loss in the financial market. Nobody's perfect. Yes, nobody's perfect. Okay, I took a stop loss hit yesterday on AUD USD. And that's just to show you that I'm very much human like everybody. I take losses also from the financial markets. Okay, you see, FOMO tapped Kelechi out also on GU. Now, the mistake I made was I never paid attention to the bigger picture on the 1 hour time frame. Okay, all I did was pay attention to this type of information, this short-term information, and I overlooked a few things I was not supposed to overlook. But let's pay attention to the bigger picture today. Okay, let's pay attention to the bigger picture today. So I want to pick this old eye because that's the highest point in price. And I want to deal with price everything below that old high. So this is another old high. Well, I feel this old high is retail resistance. Okay, that was why we had price bump into it every time and drop. So this is liquidity for me. Okay, this is liquidity for me. I just put a dollar sign there to note that. Now this was break a market structure for me, a major break a market structure to the downside. So I know dollar was, the AUD/USD was bearish because dollar was bullish. So this is an order block here. If we go to the 4-hour time, you see this is an order block, and we tested it and we went down. Okay, that proves the point. Now, another thing I want to, knowing everything that's happened here, this is break a market structure, price going down, price went down. There are a lot of entries here, if you understand what I mean. A lot of entries, RTU lower time frame 15 minutes, 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 RTU lower time frame 15 minutes. Like a lot of sell entries right here. Even right here, a lot of sell entries. Now, let's focus on this. We understand that we are going back up on AUD/USD. Now let's focus on that piece of price action we want. Okay, let's focus on that piece of price action. Now we had a stop hunt right here. Okay, we had a stop hunt right there, and that stop hunt was the bomb. It was what would push price up. Then we had a break in market structure, yeah, because this was the last lower high before we went higher. We went up, and everybody was buying here. Everybody was buying. Retails were buying at this support. It was just a trap to get your money off the table, because this was liquidity right here. Just seeing this, don't mind me, I'm using different colors. I'm just so used to that. Seeing all of this, everybody thought this was the end of it. Like this was the end, and we went up. But FOMC came and took price to where it really wanted to go. Took price to this order block right here. That was how I got stopped out on AUD/USD. My stop loss was 5 pips below this area, just 5 pips, and FOMC took me out 5 pips because I was already in the trade here, lower time frame entries, and took me out, went away. I couldn't react. Okay, I got all angry. It's fine to get angry about the markets. Don't just revenge trade. Okay, it's normal to get angry about the markets. Don't just start looking for entries immediately after that. If I had gone aggressive on it, I would have entered possibly somewhere on this week and made money. But knowing that I would get another entry right here today, I'll get another entry right here. Even if it's not today, possibly next week, Monday or something, I'll get another entry right here today, and I'll buy. I already have a limit order here, so it's not even I'll buy. I already have a buy order waiting here with a, I think I used 15 pip stop loss. Yeah, a 15 pip stop loss. A 15 pip stop loss and a target of God knows how many R that is. Okay, that's 13R. I'll be making 13% of my trading account on this one trade, just this one trade, if it plays out properly. And I'll be using 1% of my trading account on this one trade. You see how easy it gets, how easy money can be made in the financial market. It's not rocket science. It's very, very easy. It's not rocket science at all. Very, very easy. You can make money like this also. Every day, every time it happens, every single time, every day in the financial markets. Are you ready for it? To make money just doing this every single day. That's how easy it gets. And see, it just needs price to trade. It's already trading lower. It just needs price to trade. What's it called? Let me look for that too. That price too. Just needs price to trade 50 more pips to the order. Okay. Let's just include spread and all. It needs 18 more pips to activate the trade before going up. So that's how easy it gets. Let's take a look at gold also. I have an order on gold. Let's take a look at gold. Wow, 1:20% of your trading accounts on just one trade. So why am I bearish on gold? I'm short on gold at the moment. Okay. Now the reason I'm short on gold is because of, if you remember, I said DXY will come higher. Why will DXY come higher? If we check the 1 hour time frame, see we've got liquidity here, liquidity here, liquidity here. This is the only POI that will make sense to trade from. One of these, or just use the major POI. But I believe we'll come back and reach this highs. So why am I bearish on gold? I'll show you why I'm bearish on gold. Okay, I'll show you why. That's if I can remember why. Okay, I think I remember. Yes. Okay, so from the daily time frame. Now you'll be wondering, gold was going up all this while, and it wasn't stopping. Then all of a sudden, one day you just wake up, you see gold start going down. Why did gold start going down? Very simple. It hit a breaker block right here. And remember, when we analyzed gold, I think 2 months ago or 3 months ago, from this old low here, I said gold was going to go higher. I was only bullish on gold because I didn't see what price was offering on higher time frame. We will come back to take out these relatively clean lows. Okay, we'll come back to take out these relatively clean lows. So this was like an induction for smart money to buy more also. Like smart money was playing with low budget smart money. Let's just put it that way. And they bought more. They made profits because it was the right thing. But if you were not paying attention, you would miss this breaker block right here. That's why I advise you don't trade SMC if you don't understand SMC. Don't bother trading it. Don't say because you read one PDF and it's never picture perfect. It's never the way it's written in books. Okay, it's never that way. It's never that way. Now, knowing that we have a breaker block on the 4-hour time frame or on the daily time frame, I can delete all of this. I can delete all of this and go and pay attention to the 1-hour time frame. There's a lot on the 4-hour time frame, a lot. I don't see it going above this high because we already have a order block here, which was tested previously by this low. But if we do go high, I'm protected. I use the very lot size that won't hurt me, and also the risk is small, so that's just it. And this is not really a clean high. This was just an old order block that price reacted to. Okay, so let's break this down. So price traded off this old OB. And give us another OB right there. Right here. Okay, give us another one right here. Now, the most funny thing is it was until my trade got activated, I thought of going down to the 15 minutes time frame to go and look for one small order block here, and that was where price went to react. Okay, so we had price traded lower. This was old lows and price pushed it. Okay, so I'm concerned on this price action. I'm not really concerned on what happened here. So look at what we have right here. The same concept every day, every time. Stop purge. This was high, low, lower, high, lower, low, lower, high, lower, low. Lower, high. It took out these minor ones, but stayed on the major one. Then we had lower, low. So this was my own break in market structure. Now I'll show you how low budget smart monies were played also. We broke market structure here, fine. Okay, we broke it here for low budget guys. We had stop purge right there. Okay, it's played out. It came back to this order block here, and it went up. Now, the idea is, even if you were trading SMC, you will not take profits here because you believe there's old eye, you've marked those areas. Even to take partials here would have been a problem because your entry would have been nothing to write home about. Even if you were using SMC, you would have placed your entry at this week, you would have got activated in a bit of drawdown before going up. But just taking partials would have saved you from a lot of things. And this was like breaking market structure right there. Then we came back lower. Why did we come lower? Within this week, there's an order block. That was why we came lower during FOMC yesterday. During FOMC yesterday, that's why we came lower into this, because there was something interesting inside that week there. Then we started trading higher, breaking every old eyes, but we're failing to break this one. That's why I am relatively bearish on gold. Now, I'm bearish on gold because number one, DXY is bullish, like bullish short term for bearishness. Okay, that's why I'm bearish on gold. And this is old low, and this is old low. I know it's risky, yes, to trade against the trend, but you have to make money off it. Vera, it's fine. It's something I would explain to you personally. Okay, you sent me a message on Telegram. I would send you content that would make all of this easy. Okay, so that's basically why I am bullish on AUD USD, bearish on dollar long term, short term bullish, and I am bearish on gold short term also. So that's why, and it's very easy. It's points that can be proven on the charts. So yes, we've come to the end of today's webinar, and it's glad having everybody. I'll send it to you also, no problem at all. It's glad to have everybody on today's webinar. All in all, making money in the financial markets is very easy, very, very easy, very, very easy. You just need to get started. You just need to start trading, and that's how you do it. Just get started. Okay, so good luck and good trading. Catch you on next week, Tuesday webinar to be precise.